What's up, guys? Eric here. And today I came across an interesting article from Bloomberg, which talks about the hostile takeover by Brookfield for Inter Pipeline. So, if you are paying attention to the oil and gas industry, or if you're interested in just investing in general and learning more about the private equity world, then this video is for you. So we will just go through the events briefly, and this is not really about investing in the stock or whatnot, but to understand what's happening in the market and explain the changes. Now, Inter Pipeline is an oil and gas company. They have 6 pipelines, 3 plants, 2 processing facilities, and also a fractionator with 19 million barrels storage capacity in Western Europe. And they also have a lot of infrastructure and pipeline in Calgary as well, which is where they're based. So here you go. You can see this is a map of where they have some of the plants here. If I click on it, it should be the location of their plant. Okay, there's no additional details. But on the left here, then you'll be able to see the pipelines. And this is their main location. With a brief understanding, let's look at the chart to understand what we are trying to discuss today. So here's the chart for IPL. And if you're not familiar with the chart because you don't know how to use technical analysis, there is a free course down below that you can just learn technical analysis from me. So what we're trying to explain here is really since February 2021, you can see the stock price used to be around $13 and then it jumped to around $17, and as of today, it jumped to $20. So we want to understand, why that is the case, what is the story, what's happening, and of course, this is not telling you to invest in it because I wouldn't be investing in it anyways. So it's just helping you to understand what's happening in the market. So let me just talk about a term called hostile takeover. Now, hostile takeover is when an acquiring company attempts to take over a target company against the wishes of the target company's management. So basically, Brookfield is trying to buy Inter Pipeline against his wishes. And that brings me to the first Bloomberg article. So Inter Pipeline, back in March 9th, 2021, they're open to an acquisition by Brookfield Infrastructure Partner LP, which is a private equity fund. Obviously, there's some conflict there, and the CEO said, "Our disagreement is solely about value. If they were to offer a value that it was compelling, that would change the nature of the conversation." Okay, so let's see what they offered. So, the Canadian company rejected Brookfield's hostile takeover bid, saying its offer of Canadian dollars 16.5 per share in cash or stock significantly undervalues the business. And this represents an 18% discount valuation compared to its peers. So when you think about this part, okay, this is as of March 9th. So obviously the discussion has been happening for a while. And let's look at the stock price first. So previously the stock price wasn't really doing anything. And then it jumped up to over 16.5 as of February. And a news article came out in March, which is a little bit late, but now with more information, we're able to see why that jump occurred. Okay, so that is quite interesting. So if they don't want to be acquired, what can they do? So after that, as of June 1st, Inter Pipeline continues to reject the Brookfield hostile bid, which they issued this press release here. And in this case, you'll see that today it reiterated its recommendation that the shareholders reject a hostile takeover bid at the value of 16.5 per share from Brookfield. And right now, they unanimously determined that the hostile bid is not in the best interest of the company and its shareholders. And basically, they are supporting a strategic combination with Pembina Pipeline Corporation. So basically what is happening is that instead of striking a deal with Brookfield, Pembina is going to merge with Inter Pipeline at 0.5 shares of Pembina to each share of Interpipeline that they own. So the price is actually at 19.45 share of Interpipeline. Now at this point, I just want to pause and help you understand what's happening. The first question we want to answer is, did Brookfield really put a price that is undervalued? And I think the answer is yes. And that's why the CEO is not happy for Interpipeline. If Brookfield would have provided a higher bid, then I think the deal would have gone through. And because Brookfield is trying to get basically a discount to buy this asset, they wouldn't be giving that high of a price. Now, when you think about the deal between Interpipeline and Pembina, we'll talk more about this in a bit, but because both of them are oil and gas companies, what they will do is a strategic merger or basically combining their business together, which means there is additional synergies. Synergies meaning some cost savings will happen, and basically it will make their business more efficient, and at least that is the theory. So here's the news article on June 1st where it says Pembina buy Canadian pipeline rival Interpipeline for $6.9 billion. So that is the $19.5 per share that we're looking at. And this is an all-stock deal. So the interesting part about this all-stock deal is that Pembina will just be raising cash from its end by issuing more shares, or just providing the shares to the shareholders of Interpipeline. So they're not necessarily taking more debt, which is a good thing. So in this case, after that is announced just yesterday, then you can see the stock price actually jumped up to $20.27 now. So keep in mind that the acquisition price is 19.5. So when you think about that, well, there's really isn't an arbitrage opportunity here for you to take advantage if the deal is about to go through. Now, of course, you don't know for sure, but in this case, if Pembina is buying Interpipeline for 19.5, then right now the price is slightly above the acquisition price. Now, of course, there's more considerations where if you bake in the synergy, then perhaps there is that arbitrage you're looking for, but it would be a long-term play for sure. Now Brookfield is responding. So June 2nd, which is just now where I read the article, and basically Brookfield Infrastructure Partners raised its hostile offer for Interpipeline to $8.4 billion Canadian, which is $6.9 billion US dollars, to break up that deal. And basically right now they're offering 19.75 per share. Now this is interesting because they're not going over by a lot. They're actually just bidding slightly higher than Pembina, which is the 19.5. So let me just go back to this article to show you the price. 19.45 to be more precise. So when you think about what Brookfield is trying to do, obviously they do have other assets under their belt as well. They are a private equity fund, but if they don't plan to have any merger with their existing assets or trying to make it more efficient, then being bought out by Brookfield is really just a buy and hold. Of course, Brookfield's team will find ways to make Interpipeline more efficient and trying to derive more value out of the company. But you can see right now it is reaching a price ceiling per se, because if Brookfield thinks that Interpipeline is really worth it, then of course they can bid above $20. Now, one of the interesting questions is, well, what would you do if you're management? And if I'm management, then I would actually imagine that being with Pembina is actually a better option because there's synergies. Now, if you go with Brookfield, it successfully got acquired by Brookfield, there is that possibility that Brookfield might not do anything. And it is considered to be a hostile takeover because right now Interpipeline doesn't want to be acquired. But of course, if the price is higher, then Interpipeline might be interested. If I'm Interpipeline and I'm acquired by Pembina and I create then Canada's largest pipeline network, then you can imagine the power in terms of pricing, the monopolistic power that these two companies will have combined. Now, of course, there is a tricky part where the government might stop it, because sometimes you don't want a single company to dominate the market. So they'll need to analyze the market share to see if it would go through. But given that Brookfield is offering a higher price at 19.75, I think chances are the government would approve this Pembina and Inter pipeline deal. So now the question is back on Pembina's court, where they would offer a price higher than 19.75 and what they would do to see if this deal would go through. But as of June 1st, they issued this press release, which is Pembina and Inter have announced today they have entered into an arrangement already that Pembina will acquire all of the shares for Inter for a share-for-share transaction. So again, this is not using debt. In terms of why I keep emphasizing on that, is something I teach in Investing Accelerator when we're analyzing the financial statements. So moving along, so this values the Inter Pipeline common shares at approximately $8.3 billion, which is $19.45 per share. So right now, the stock price is a little bit higher, and I think the only explanation for that is really they consider the future synergies and the pricing power to be higher once these two companies are combined. And this transaction will create one of the largest energy infrastructure companies in Canada, with a pro forma enterprise value of $53 billion. Okay, and then afterwards, you can read this on your own if you want to, but basically, the near-term synergies, which is the cost savings, or they have new product offerings or cross-selling, will be 50 to 200 million annually, which are expected to immediately contribute to a meaningful adjusted cash flow per share accretion upon closing the transaction. Now, when it comes to synergy, based on my experience, it doesn't really happen exactly that quickly. So I think this sentence is a little bit more aggressive than it needs to be. Usually when you're planning for synergies is across the next 3 to 5 years. So you're not going to see this benefit immediately, would be my view. So there's also an additional project, which is the Heartland Petrochemical Complex. And that is currently building, and it is not in full service yet. But once it is in full service, then I think that will lead to an additional cash flow, which is 1.1 to 1.4 for Inter Pipeline. And I think that part where it is still under construction is where the value is. And that's where Brookfield is trying to basically capture, purchase, hold, and then sell at a later date. Okay. Now, there's also some interesting KPIs that you can look at. Basically, if you combine both of them together, what would it look like? So when it comes to the transaction rationale, basically the reasons for the acquisition or the merger is to integrate the asset base, basically cross-selling, which is the second one, and basically having a larger network to deliver in Western Canada. And they also, of course, get some synergies, which means there's going to be layoff if there are duplicated functions like HR or accounting or stuff like that. And then there's probably some collaboration they can do as well. So you can read this if you want to. But this is a very typical merger scenario where you have two oil and gas companies and then they realize the synergies. And then you're fighting against a private equity fund, which can potentially offer a higher bid, but then there might not be as much synergies compared to being acquired by Pembina. So that's how you think about it. So I just thought it was an interesting transaction to go through since it's happening in the news and help you understand what's happening in the market. So that's actually something we do on a weekly basis in Investing Accelerator. And that's what we go through in the weekly group coaching call, except we go a lot more in depth into the opportunity itself and figure out how to make a profit from it. Now, in this case, given the news article is already out, I don't think there's a lot of advantage remaining to make a profit unless you think the price war will continue, which will bid the price higher and higher. But if right now the stock price is already kind of near its fair value, then any price increase from this point onward will probably be a premium. which means the winner of the bidding war will have the winner's curse, which means they are overpaying for the asset itself. So if you like this kind of video, then give me a like below. That would tell the YouTube algorithm that this is a good video.